Welcome to the Closing Beat, a live show where we cover the stock market, financial tips to get your dough straight, and sometimes Disney World. Wait, seriously? Disney World? All right then. The Closing Beat, presented by Jazz Wealth.
What's good, everybody? How we doing today? Welcome to the Closing Beat. Happy Tuesday already, right? Already coming up with the Tuesday. Yeah, can you say that like so early in the week? Like the week's going by quick. What's your problem? I did it though. I did it. Hey, well, I hope everybody's doing good. I will start off today by saying something I've learned being here with Jazz. We have, thousands of clients all over the country. Everybody's got different beliefs. It's funny how people will open up to you and they will tell you their beliefs because, they feel like they know me. And keep in mind that I don't judge, right? You can have different political beliefs. A lot of people don't want to invest in like alcohol or maybe pot stocks, or just something political that they believe strongly in. And that's cool. That's fine with me. You can invest in so many different things. If you really want to go against something that you feel strongly about because of what they're doing or whatever, I'm not going to fight you on it, right? The biggest thing is, remember, if I have data to show that you're hurting yourself, I'm going to work hard to make sure there's something else that we can do that fits your criteria, but also helps you grow. Not going to let you grow less, because we're like the only advisor where we only get bigger if you get bigger. We don't sell stuff, right? So if your account doesn't grow, we're sitting here twiddling our thumbs. I don't like that. I want to grow. So keep that in mind, right? If I have some data to show, oh, you shouldn't be out of the market, you shouldn't be out of this type of stock, but let's go find one that you believe in. I love that stuff, man. So we can still be friends. I won't judge you. I was just telling a client about when clients get divorced and they're both clients here. Oh, that's kind of funny to go through. And I'm sort of heartless, right? Because I just don't want them to ruin themselves financially. But, things like that happen. I'm happy to talk about it. I love being the advisor that's not just about retirement stuff. Things come up. I mean, people buying campers. You got people going on this trip where they take a boat and they just go around the east coast of the United States. Then somehow you go up the middle of it or something. Like, I would never do that, but I want to make it happen for you. So just wanted to start with that because a lot of people going through some stuff out there, and I want you to know you got help from someone that is just going to help work with the numbers and be unemotional about it. As far as the stock market goes here, we are waiting on the next catalyst. You know what I mean? That is what we're waiting on. And I don't know if that's the Fed. We got Jerome Powell speaking tomorrow. The big one's going to be the job number that comes out on Friday. And it's kind of weird to say this, but we want a decrease in jobs. Right? You would think, oh, that's bad for the economy. But it's good for the Fed to maybe slow down. They want jobs to come down. They don't want you to lose your job, but they want the total number of jobs to come down, which will soften the speed at which employee wages have been going up, which hopefully helps inflation, which means they can stop raising rates as fast. So that would be good news for the market on Friday. Last week's data, I was digging through it because I was playing a little bit of catch up there. The home data. Really interesting. So I'll try to slide over here real quick. Yeah, there you go. Pending home sales down 35% year over year. In the light blue in the background, that is the current level. And this is the comparison to year over year, right? So current pending home sales here, year over year comparison, you can see where it's come from, of course, there. For sale inventory was up 12%. That's the largest gain we've seen since 2015. You know what that means? The inventory levels are going up. They're still at historical lows, right? So there's nothing there to say like, oh my God, inventories are up 12%. It's just a little bit of a bump off the lows, so don't worry about that there. Sale prices were up about 2% year over year. Time on the market was about 17 days lower than 2019 because we don't compare the COVID year there. Pull down the guy. Oh, he's still jamming? Oh man, there he is. There you go. All right, we'll get rid of that. I like his voice though. And then one other thing I want to talk about is the price declines on active listings. This is something I like to follow. This is using Zillow and Redfin's data. So we look at that. Wow, it looks so bad there. We got to work this out. We go up a little bit. So price declines on active listings are starting to slow. So I know it sounds a little bit weird, but look at the light blue in the background. The number of active listings currently lowering their price. All right, maybe we've peaked there a little bit. Here's the year-over-year change. And so that is up 4% compared to a year ago, but starting to show a little bit of weakness there. So all of that kind of said there initially to say the Fed's getting what they want. They're getting lower home prices with higher interest rates. That's probably a given there. They're getting, hopefully, less jobs, lower wage increases there. Everything we need to slow down inflation. So far, soft landing is working out the way they'd hoped. And I'll just point out one more time here. Home builders could care less, outperforming everything, and not in the last couple of days, but outperforming everything else, refuse to pull back there. Home builders have been really, really strong. Kind of like the honey badger there. What do they say? Honey badger don't care. Very, very cool there to watch them stand up. Now remember this, I'm using the XHB, and the XHB includes things like Home Depot and Sherwin-Williams and things, but it's all part of the housing market there. All right, moving on, a little bit of a rant there. The S&P should be coming up for you right at the top of this downtrend here. We're looking for a catalyst to make people believe that the downtrend is going to break. That's all you need. It's all human psychology at this point. Any catalyst that could be the Fed tomorrow, it could be the jobs numbers that come out. That's what you have going on there. I want to point out the MAGA stocks that not named by me, but the Microsoft, Amazon, Google or Alphabet, and Apple. Microsoft and these groups of names, those MAGA stocks, they're down 20% off of their highs. Some of them, that's more troublesome than others. Amazon actually is the furthest off of its highs and making a record there. But all of them down 20%. And I find that interesting because looking around, this is the only time in history where okay, that's fine over there. All of them are down greater than 20%, but the S&P is not. Remember the weight that these things have. Those four stocks make up about 20% of the S&P. So if that's a drag, you would expect the market to be dragging lower as well. Well, it's not. So what does that tell you? There's a lot of underlying strength in everywhere else. All the other 500 stocks, right, because there's 505 stocks in the S&P, take out 4 of them plus Alphabet's, they have 2 classes of stocks, and you're left with 500 stocks. Those other 500 stocks are helping support everything else, even though they control 80% when just these 4 people control 20%. So rather interesting there. It tells you that maybe not today and yesterday, but overall, a lot of strength elsewhere in the market, people believing that the market has maybe found a bottom. Doesn't mean it's going to rally to highs, but it's maybe found a bottom. If all those stocks are doing so well that these big leaders can't pull the market down, well, that shows there's a lot of buying in there. Anyways, I just want to point that out to you. How about that? What do we have here? The Dow. Let's take a look at the Dow. It's only down about 7% year to date. Massive rally breaking the downtrend as opposed to some of the others that are out there. I want to point out today, you got Boeing adding more than 20 points on the Dow today, and American Express also adding more than 20 points apiece. The problem, UNH took away what Boeing did, and Apple took away what American Express did. Hence, you have sort of a tug-of-war there in the Dow. Over the last 1 month, did I have that for you? There you go. So over the last 1 month here, here's what we have as far as the biggest contributors. Goldman Sachs, the leader there, 11% gains, adds 268 Dow points for the last month. In other words, if Goldman Sachs was the only stock in the Dow, over the last month, the Dow would have gained 268 points. Boeing adds 189, Home Depot adds 135. Interesting, right? That goes back to the home builder comment we made a second ago. Refuses to pull back there. What about this recession that we're supposed to have, right? Pulling down the index is United Healthcare. Some healthcare stocks are pulling back after being one of the leading indices, so that's kind of understandable there. That's not a sign of weakness, I don't think. And then Apple, you know the ride that they've had, and of course Disney with all the chaos that's going on with them. So those are your biggest contributors in the Dow. Just thought that'd be fun to share with you. All right, you got the NASDAQ here still hovering right around down 30% year to date on that one. That's largely thanks to tech. In the broader NASDAQ, you have Lucid and you have Rivian. Right? You can see the charts and how nasty they look there. They are the worst of the large cap NASDAQ stocks, down about 70% apiece, each one of them there. I want to point out Netflix. You can see that one there. You got PayPal in there as well. Datadog. I'm going to give you a few ticker symbols here as I rattle these off. I made a little list. Zoom, Match, and Meta. These stocks all down over 50% year to date. So if you like the discounts, I don't know that now's the time to be looking to buy discounts there, but those are the large cap NASDAQ stocks that rank as some of the worst performers there, in case you were wondering there. In case you were wondering about our Wine and Wealth this week, it's going to be an extra special one. We are going to be launching something new here at Jazz Wealth that is available for all clients to use, and we are testing it out today. It's something that'll be in the dojo. I'm not going to give it away, right? So we're getting ready to launch that. We'll do that on Thursday in our Wine and Wealth. Also, if you're interested or you are a client, go back and watch some of these recent Wine and Wealths, man. The goal of that class is to get more detailed than I'm allowed to do publicly. So any little thing that you want to know about, not only do we say how it works, but then we go through the details of it. You a business owner, you want to rent out your house and follow that Augusta rule thing that all the kids are talking about. How specifically do you do it? And even more importantly than that, we have a pamphlet that you can take with you to keep all your records. We use it here at the company and not complaining. Anyways, let's go back over here real quick to a couple other things. You got crude oil is higher. China. Now, we've heard this before, but China's been talking about a little bit of easing in restrictions. And they're not saying, hey, we see the protests, and so we're going to ease the restrictions. They're saying, all right, we'll work with you. The virus now that they're experiencing is not as strong as the original COVID-19 virus. So they're saying, okay, if we can speed up vaccinations on the older people, we may be able to ease some of our restrictions. It doesn't matter to me whether that's the right way to go about it or wrong way or whatever. What matters to the world is the fact that they're giving an inch, or at least they're commenting about giving an inch. Last time they did this, they said, nope, that's false news. We're going to continue lockdowns. This time, there's been a lot more coming out. So maybe they're giving a little bit there. That's important for oil. Why is it important for oil? They're the largest importer of oil. There's a lot of people over there. They need a lot of oil. And of course, the oil markets depend extremely heavily on them. You also have OPEC meeting coming up here. Production cuts still very much on the table. However, I wouldn't be surprised if they just say, we're going to keep waiting and see what happens, right? I don't know that they just come flying out with these cuts with this market. I do want to point out the dollar real quick because we talked about this, one of the bigger pullbacks that the dollar has had. The dollar is not volatile. Bitcoin is volatile, if you're going to count that as a currency. The dollar is not known for being volatile. This is one of the biggest declines that it's had, and we went through and looked at all the other ones in one of our classes here, and I showed how the dollar does not recover from large declines right away. That's exactly what's happening. So I like to revisit these things when I share data with you and you go, but this time's different. I like to share that with you just so you can see, what's going on and kind of follow up. I'd rather tell you ahead of time than tell you I told you so. What else do we got for you? We'll talk about some stocks in the news. Let's do it. Okay, here we go. So we got UNH. I mentioned that one just a second ago there. So a little bit of a pullback here today. UNH, the guidance going forward for 2023 was not as strong as what we previously heard. They adjusted some numbers. This is the simplified version of it. And now we would say guidance for the forward year is, what's the word they use? Mixed, divided, uneven, right? So whereas before it was strong. So a little bit of a pullback there for United Healthcare. It's only one of about 100 stocks in the S&P, though, that is up over 6% year to date. And believe it or not, there's over 100 stocks that are up at least 6% year to date. If you're curious, most of them are energy. You probably could have guessed that. McKesson is the top non-energy stock that has the biggest gain year to date, 53%. Other than that, you're looking at a lot of energy stocks that are positive on the day, or on the year. Baidu in the news there, they're expanding their driverless ride-sharing program. If you look on YY.com is not the best one to use. That's kind of like a live YouTube over there in China. But you could look on that if you want to look for the Baidu ride-sharing cars. This is already happening. This is not like the future. This is already happening. They now have, I believe, over 1 billion different data points that the car uses to determine what they're trying to solve for. And this is going to happen in the States as well. So you can have a driverless car, but what we're trying to solve for now in this world, the autonomous vehicle world, is if there's really going to be nobody driving, then that car has to experience everything. And you can read about this if you like. So much like they know if it's a person, okay, stop, there's a person coming. They know if it's an ambulance, pull over and stop, right? What they're solving for is like, what happens if somebody drops a bag and a gust of wind blows the bag across the front of these sensors? How do we handle that? Well, we don't need to stop. We can continue. So they call them the long tail events, just like anything else. You want to solve for the outliers, things that you wouldn't think would be happening. They're going to expand that. They're doing really, 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 really well with that. And this stock, in addition to pretty much everything over in China, had another great day, at least as far as American traded Chinese stocks. Snap Inc. says, get back to the office. We need employees here at least 4 days a week, and nobody seems to be pushing back on that. So good for them, getting back to the office and getting to work, maybe because they need to. You see that stock price there? Microchip says that their backlog remains strong. This coincides with what we heard out of Intel, what we heard out of AMD and the others, NVIDIA as well. Different place, but same concept there. So good for them. The stock has already rallied with the semiconductors in general, so it's been a really strong rally for them. So I don't know there's much more until the markets give us a little bit of a break there. And Splunk will be the one that reports earnings tomorrow. Actually, you have Hormel reporting tomorrow. Not Dropbox. Box is reporting tomorrow, Five Below, Lazy Boy, PVH, Salesforce, Snowflake. Splunk I put on the list because they have the worst track record in terms of performance after reporting earnings. You have a total of 6 of the last 8 earnings reports resulted in the stock trading lower. So I like to point those kind of things out if it helps you there. Also, your Doge straight tip of the day is going to be, there's going to be another recession. No doubt. You're going to live through many, many, many more recessions, economic downturns, stock market downturns, which remember, those are 2 different things. And so tonight, actually, I'm going to come hang out with you guys, do a video on 4 cool things that you can do to get through the next recession without doing something silly, right? Because you can probably all say, I've done something silly through one of the recessions if you're a little older. One of the tips is going to be to break your portfolio into pieces. And I'm going to explain that to you because so many people say, I'm going to retire at 65. Or if you're buying a house, my goal is to buy a house, 2, 3 houses, whatever it is, in 10 years, right? Well, if you're retiring at 65, that's not the date that you need all your money. That's the biggest comment I get on my most popular video on YouTube, which was how to retire with like $1 million or something, depositing $28 a week. Everybody says, wait a minute, those numbers don't add up. Well, yeah, if you're going to withdraw the money on the day you retire, of course the numbers don't add up. So the biggest tip that we'll share tonight, and I'll go through everything, is break it into pieces, man. You don't need every dollar on that day. You're going to live 20 more years, so a lot of that money can stay aggressive. Anyways, I'll come back to you here 7 o'clock tonight. How about that? And we'll go over that at home. Jazz after dark, huh? I will also try to take your questions if I can. See if this all is going to work right. And I'll pop this out here. Andrew, supply crunch is coming. The data just came out on that. The supply chain, as far as transportation of new products into its final delivery place, is actually easing. So it's not as congested. It is flowing much better than it has. Still very much backlogged, but not as bad as it was. So it's moving in the right direction, but you know, you could be right. Any little thing could change things there. Can't be any worse than drivers around here. Yeah, can a computer drive better than me? Yeah, that's true. Think about it though. Like, how often are you driving around and you see like a dog chasing a squirrel and then the squirrel keeps going, but the dog turns around and you're like, whoa, I got to process that really quick. Those are the things that they're trying to solve for. Yeah, man. Yeah, we're trying something different at night. We call it Jazz After Dark. Grab a drink and hang out with me. We'll cover something just laid back and see what we can cover. You'll get an alert or something there. Salesforce better than Microsoft? Ooh, that's a tough one there. I don't know if you're saying as a trade or investment or whatever. I'd be leaning Microsoft because it's more extended in the short term. But I don't know what you're contemplating there. Yeah. Called roadkill. Yeah, most of the time, one of them is going to get hit, right? The thing is, if it's a driverless car, especially here in the States, I don't know so much in China, but can you imagine the first driverless taxis that hit something? Like, the media is going to make that look like paranoia, right? So they got to solve for that, and they're doing it. Yep. Work may be over for Slow Joe, but it is not over for me. I love it. I'll wrap it up there. Appreciate the comments on the new layout. We're just trying to simplify it first, then come back and add in more stuff as we learn what we want to add there on the old stream that we're working with here. You guys enjoy the rest of your day. I'll get out of here, let you do your thing. We'll see you later, all right? And learn a little something. And thanks for your support and all that good stuff. We're having fun with it. First time in a while, we're having some fun with different types of layouts and videos and all that good stuff. So glad you're enjoying it. And supposedly I press this button and we call it a day.